Hey everybody, hope everyone's doing well and had a good day. This is the Emini review for Tuesday, June 11th, 2024. And as always, we'll look at the daily chart first. So coming into the day, we know a couple of things. The market's been in a tight trading range. Some traders might see it as an expanding triangle, but overall we're high in a trading range. So here's the possible expanding triangle, and here's yesterday. Plus, overall, we're high in the range. Now, the bulls have had a rally here from the 31st of May, maybe leg 1, pull back, leg 2, pause, and then a leg 3 here. But my concern here for the bulls, I think we're high in a trading range, and the odds are there are more sellers above. And there's also resistance on the weekly chart. The high of the prior week is a magnet, and I think if we trade above there, we'll find more sellers. And then as you can see here, it's an overall trading range. So the one concern about here is that we could easily get a vacuum back down to the middle of the range. And for the bulls, it could be 1, 2, 3 pushes up. But as far as the bear case, a bear doesn't want to sell below a bull trend bar. And this is the first reversal after a micro channel. So this might lead to a pullback, and the first reversal will probably fail, lead to a small second leg, and then the bears will look for a second entry short. And I have a few lines drawn today. Yesterday's high and low, and the high of the prior week, just because that was tested today and became an important price. So for bar 1, we gapped down, but yesterday was a fairly strong small pullback bull trend, and then it converted into a trading range. Now we know the market is in a trading range on the higher time frames. And so even though this was a strong small pullback trend, the overall context does not support much more to the upside. And now we're getting a gap down and follow through. So bar 1's a bear trend bar, closing below its midpoint, but there is a tail. But the gap down plus this bar, the market looks like it's accepting the gap down, and we're going at least a little bit lower. Possible magnet, the low of yesterday. Maybe bears sold above bar 4 yesterday. They got trapped. That's another possible magnet that they want to test. But the point is, we had this rally and then a trading range, and we're testing where bears got trapped. So it's possible we have disappointed bears in this area. And then bar 2, another follow-through bar. But most of the bar overlaps bar 1, so it's mostly sideways, and the market might be channeling down more clearly on a smaller time frame chart. But probably sellers above bar 2, probably going at least a little bit lower. And then bar 3, a bear breakout. Bad high 1, so still probably more sellers above. It's a micro channel, consecutive bear bars, but lots of overlap and buying into the close. Plus the bars 2 and 3 are fairly small. So bar 1 was a fairly big bar, but then bars 2 and 3 are smaller bars, and that's a loss of momentum. And then it's possible the market's in an overall big trading range. Like I said, we have trapped bears to the left, so that's concerning for the bears. And then bar 4, a little bit of a surprise. It's a bear breakout, but remember, breakouts are climaxes. Bar 4 is a good bar for the bears, but it's also climactic. And so we had a gap down, which was climactic, plus bar 1, and then another sell climax. It's breaking out below yesterday's low, but remember what I said on the daily chart. There was no good sell signal bar, and it's a micro channel. So this is the first pullback. So the odds are there are buyers below. But again, bar 4 is a good bar for the bears, but it's the first bar breaking out below yesterday's low, and only about half the bar is below yesterday's low, and the bears still need follow through. And then that was their follow through. So it's bare minimum. It's an inside bar and a doji. So the bears prevented a bull bar, but that's fairly disappointing. If a bear sold the close of bar 4, front running the breakout, trying to get in early, that's their entry bar, they might be disappointed. And it's a low one short, but you have to judge the strength of the breakout. Because of the overall context, I think it would be wise to wait for more proof from the bears that they're strong and that we're going lower. But in general, 50% of breakouts on the open are the wrong way and they reverse. And with the context on the higher time frame charts, I think it might be dangerous to be short here after consecutive sell climaxes and possibly low in a trading range. And we're far below the moving average. And then bar 6, it looks like bears disappointed, bought back shorts. I think it's too early for bulls to buy, but now that we have bar 6, it looks fairly disappointing. The bears who were short, they see bar 6, they probably exit, and we're expecting at least a little more up after bar 6, strong enough for its own second leg. So bears, they'll exit, look to sell higher, and aggressive bulls will buy above bar 6. Strong bull bar closing on its high after disappointing follow-through on the bear breakout, plus it's the open. Bar 7's a doji, but so minimum follow-through for the bulls, bull breakout, minimum follow-through, and then the flip side for the bears, bar 7's a low one short. But the odds are there are buyers below. This is disappointing enough that the bears will wait for another leg up before looking to short, and the bulls who did not buy will look to buy below bar 7. And then we continued higher on bar 8. Smaller bar than bar 6 and 7, so not ideal for the bulls, and possibly a couple legs up. 6, pause, 7. We paused, and then bar 8, we went a little higher. We're testing the top of the sell climax, bar 4, so it looks like we might have sellers at this level as well. And keep in mind, the bear breakout was strong enough for a second leg, so we might have traders scaling into shorts, maybe selling 50% pullback and looking for a test back down. But the bulls, they now have, it's really a micro channel since bar 4, and then 3 consecutive bull bars. The odds are there are buyers below. And then 9's breaking out further to the upside. So for the bears, it's not ideal to be selling against 4 consecutive bull bars. And now it looks like we might have big down, big up, big confusion, and a trading range. And if the low of yesterday is support, which it looks like it is, we had a failed breakout and a strong reversal, more and more bears may give up and look to sell higher. Bar 10 pause, so we might start to go more sideways here and pull back. But again, after 4 consecutive bull bars and a micro channel from bar 4 to bar 10, the odds are there are buyers below. More buying on bar 11, so still a micro channel. And the bull bars, they're not climactic, they're fairly similar in size, and it's a micro channel, so there's a sense of urgency. If traders are trying to buy a pullback with a limit order, and say they set a limit order below bar 7, they did not get filled. They raised it below the next bar, did not get filled, over and over. And at some point, they just hit buy the market. Now, again, this is strong enough that any pullback will probably lead to a second leg up. And again, with the higher time frame context, and if you judge the strength of the breakouts, the bear breakout was climactic and a failed breakout of yesterday's low. And the bull breakout is not climactic, and there's more bars, and it's strongly reversing the bear breakout attempt. So what we might have here is an opening reversal. The market tries one way, finds buyers at a magnet of some kind of support, and then reverses, and we have an early low of the day. Most bars have tails, which means they go the wrong direction at first, and then they reverse, and that's what we could have here. $12 continuing higher, but another doji, and getting high in the range, the opening range. So we might have some profit taking and some sellers, but still the odds are there were buyers below for a second leg up. One of the problems I have with buying here is it might be 3 legs up, a parabolic wedge, 1, pause, 2, pause, 3, and then we're right below the moving average as well. 13 looks like we had a sideways pullback with an inside bar, so inside bars lowers the probability for breakouts, but as far as selling above, I would not because of the context. Strong bull breakout, probably going higher, but as far as buying below, I don't have a problem with that. And then 14 continued even higher, so we still don't have a pullback. This has been a micro channel since bar 4, so it's been about 10 bars. Once you get past 6 or 7 bars, the probability of a pullback or reversal becomes higher than continuation. So at this point, this is extreme behavior, and we're expecting a pullback, but we're expecting the pullback to be minor. The bears have to do something pretty significant to reverse this rally, starting with the trendline break and then a retest of the extreme. And then we got a bull breakout, 15. Is 15 an exhaustion gap or a measuring gap? Well, it's one or the other. And it's like I just said, the bears have to do something drastic to disappoint the bulls. So this might be a buy climax and a bar that bulls take profits on, but any reversal will probably be minor, and it's more likely the market's going higher. There are magnets above, including the close of yesterday, so I'll draw that one. And then bulls buying below any one of these lows, below bar 81, 77. You can see here, below bar 61, bar 15 tested that magnet. And then over here as well. So we are stalling. We're pulling back on the 15 close. Some sellers into the close, but strong bar. But again, the problem, it's a parabolic wedge and then a bull breakout. So we might pull back here. 16 an inside bar and a high one, but not early in the rally. Fairly late, and even though this is a strong enough rally for a second leg, we might be in the late stages of this breakout. And 16 is a high one with a weak signal bar. Plus it's an inside bar, so there might be more sellers above. 17, bull breakout, and it's a good bar, closing on its high, but the bulls still want follow through, but still always in long. And okay to be long. And then 18, the bulls got follow through, but 18 is a smaller bar than 17, and that's a little suspicious, not ideal for the momentum to be slowing. But good for the bulls. They're breaking out below prior bars. They're breaking out above both moving averages. And the bears have not controlled the bar since bar 4, or you could argue bar 5. So not enough selling pressure to be selling. The options are long or flat. And then outside bar 19, so bulls, always in bulls might exit below 19, but they're still expecting this to be a minor reversal. But 19 is disappointing enough, and the rally's gone on far enough that bulls who bought down here, anywhere in here, are looking for any reason to take profits and get out. And a bear bar closing on its low is one of those reasons. But I said it's a minor reversal, so maybe we get 2 legs sideways to down, and then bulls look to enter again above a bull bar closing above its midpoint. For the bears, they might look to sell for a scalp, looking for a small second leg, but I still think there were buyers below, and selling is not a great idea. You never want to be the first bear to make money in a strong bull trend, and it's like I said, the bears have not controlled the bar since here. Follow through on bar 20, so bear breakout and follow through, but it's minor. Look at the size of it compared to the rally. Strong enough bear breakout, 19 and 20, there's probably sellers above, and a second leg down. But now we're at the moving average, we might bounce here, find buyers, and overall there's limit orders buying below any bar to the left, looking for a second leg up. And then 21, another bear bar, but going more sideways, completely overlapping bar 20. So not ideal for the bears. It's a small breakout. It's becoming two-sided, and it's in a bull trend. Bulls are looking to buy below these bars. And you can see what happened on 22. We traded below the bear micro channel, found buyers below. We're also at the moving average. So now we have a bull bar closing on its high. Do bulls buy above 22? Some might, but the problem I said, strong enough bear breakout for a second leg down. Sorry, I had to pause there for a minute, so I forget exactly where I left off. But the point is here, this was strong enough down for a second leg. But the second leg is minor, and this entire reversal is minor. So there might be reduced number of bulls buying above 22, but it's still always in long and still okay to buy above 22, stop below. Stop not below 22. Stop down here. Here's the theoretical stop. You're not going to let that stop get run, but you also don't want to use a stop below bar 22. That's a skunk stop. Like I said, this might get a second leg down, and if it does, it might go right below bar 22 and then reverse up, trapping weak traders out. 23, a pause bar, so it's a trading range bar. And you can see what happened. The bulls did not eagerly buy above 23. We went sideways. Now the bears did not eagerly sell above 22 as well because it's a bull bar closing on its high. But now there's disappointment. The bulls and bears see the bulls did not buy. And the bears now might sell for a scalp, looking for their second leg down. They sell on maybe a 50% pullback, and we test a little lower. But the odds are this is a minor reversal and buyers below. 24, a little more to the upside, but on a smaller time frame, this is a spike in channel, and we might go a little higher, but the odds are probably find disappointed bulls who are long, maybe buy the closed bulls on bar 18. Anyone long over here, disappointed with this sell-off. That's in part what leads to the second leg down. So we pull back, go a little higher, and then get a second leg down. So 24, this is not the same buying as this. These are small bars overlapping each other within a bear breakout, probably going more sideways to down. You could also call it a triangle. Market's in breakout mode, but we still might need another bear leg before the bulls come back in and we get trend resumption. 25, testing the extreme. We went above the trend's high, above bar 19, but found sellers. So disappointing follow through. It's the channel phase, so spike, pullback channel, bulls take profits above bars, as seen on 25. Now the market might be converting into a trading range. We have a couple legs up, maybe one leg down, maybe one or two legs up, might get another leg down. But 25 is a weak sell signal bar, and it's a micro channel since 22, so that reduces the number of sellers below 25. And then 26 was a pretty strong bear trend bar, but it's still completely above the moving average. And like I said, 25 is a weak sell signal bar. So we might go a little lower, but if this is a trading range, bulls who bought below 25 and scaling lower will probably make money. And for the downside for the bears, I think it's probably limited. 27, we broke through the moving average, but there's a fairly big tail on 27, and 27 did not close below the low of 22. So we found buyers below 22. We traded below it. Traders bought into the close. Now this is still strong enough for its own second leg, but one problem for the bears is the context. Bull trend, minor reversal. Now we have two legs down. Some traders might see it as a wedge bull flag. And maybe this is leg one, pull back, leg two, and a second leg trap. 27 is a high 2 signal bar, but it's a bear bar and a big bar, and there's probably more sellers above. And then 28 became an inside bar. We tested a little higher, maybe tested the breakout point below 23. We came close to it, and then reversed back down. So for the bears, this might be a nested 2 legs down, 1 pullback 2, and 1 pullback 2. 28 being an inside bar reduces the probability for a breakout. So we might have more buyers below 28. And as far as selling above 28, I think it's risky because this is still a minor reversal in a possible bull trend. The bears have done enough now that there's a trendline break, but the trendline break doesn't have all that much energy. It's more sideways than down. Where are the big consecutive bear trend bars closing on their lows? These are decent bars, 19 and these here, but 19 wasn't even breaking the trend line yet. And 27 has a big tail below. So the bears still need to do more if this is going to be a major trend reversal. And you can see we broke out below the inside bar, broke out below 27, and reversed up. Now it's more clear, 3 pushes down, 1, 2, 3, and a bull reversal bar on 29. Bulls who are always in long, they'll buy again above 29. If a bear was short, taking a chance on a major trend reversal, they probably have to exit above 29 and maybe look to sell higher and just judge the strength of the continuation. But the market has been sideways for enough bars here, it might be converting into a trading range. So even if we go to a new high, there might be more sellers. Inside bar 30, but it's a low 1. You can call it a low 2. Micro double top, maybe with 28 and 30. But the context is bad. It's a bear channel, and in a bull trend, it's a bull flag. You're selling low in the bear channel, and it's an inside bar. So that reduces the probability as well. So there might be more buyers below 30. And we went below 30 and reversed up. So now we have certainly 3 pushes down, micro double bottom, and maybe a double bottom with this breakout here, 14. And then a bull reversal bar closing on its high. Bears will exit above 31, and always in bulls will buy. 32 is the entry bar, so if always in bulls bought above 31, that's a disappointing entry bar. But on the flip side, we've had 3 or 4 legs down, and this is a low 2 or low 3 sell setup on bar 32. So again, probably more buyers below. And there were buy orders below bar 32, but they did not get filled. So bulls trying to buy below 32 had to raise their limit orders. 33 is a bull bar closing on its high and a 3 bar micro channel after 2 or 3 legs down in a bull trend. So we might get trend continuation here. And I think the worst case scenario for the bulls is that it's a trading range. And even if that's the case, we've had a couple legs down. This might be the low of the trading range, and the high could be all the way up here. 34 bear bar, but again, it's a low 1 short. We have a bear leg, a pullback, below 33, a weak sell signal bar. It's a micro double top with maybe 29 and 33. You can call it a low 2, but the point is it's a bad place to sell, and it's a weak signal bar. Probably more buyers below. And then 35, continuation for the bears, but when they broke out below the swing point 31, there were buyers. And you can see it's a more clear, maybe 3 legs down, 1, pullback, 2, pullback, 3. And bulls see a wedge bull flag, and bears are hoping we get the low probability event. And they're hoping this is an overall trading range day, big down, big up, enough of a trendline break, maybe an endless pullback. They might even argue here, tight bull channel, trendline break, retest of the highs, and then major trend reversal here, higher high, double top. But this is a pretty weak bear leg, and when you compare this to the bull leg, obviously the rally is stronger than the sell-off. There's might be a parabolic wedge in here, but it's less clear. This is an entire micro channel. And obviously for the bears, more clear, 3 legs sideways to down. And it's a bear channel, so more likely a bull flag, and the breakout will be to the upside. But 35 is a weak buy signal bar, so that might reduce the number of traders buying above. But I do think it's reasonable for bears to exit above any bar. 36, a bull bar, slightly breaking out above 35. If this is a bull flag and a wedge bull flag, 1, 2, 3, 36 is the signal bar that bulls will buy above and bears will exit above, and this is where you expect trend continuation. But again, even if it's not still a bull trend, it's more likely a trading range than there's a lower probability we get a breakout to the downside here. And so we could test all the way up here. Here's the 25 week signal bar, probably test the low of that bar, and we'll probably test the extremes. 37, a bull bar closing on its high, so bulls who bought above 36 have a good entry bar, but we're right below the moving average in a tight trading range, so there might be sellers here, but it's still minor. And 38, you can see what happened when we got there. The market reacted to that price. We found sellers, but is 38 an enticing sell? Of course not. It's 3 consecutive bull bars in a weak bear channel and an overall bull trend. And 39, broke out to the upside. We're going higher. It's a 5-bar micro channel, and 39 is a strong bull trend bar. Might be by the close, probably back to always in long. I don't think we ever flipped to always in short, but it might have been trading range mode, which is buy low, sell high. But the market never clearly flipped to always in short in here. And so bulls will buy above bars like 31 and 36 to get long again if they exited. Some might have bought again above 22, but then exited below this bear bar. And then bar 40, everybody sold at close of 39, trying to break out above the tight trading range and the moving average. But bar 40, still bad context, 5-bar micro channel, really a 6-bar micro channel. Bar 40 is an inside bar, reduces the probability for a breakout, probably buyers below and going at least a little bit higher. And then that's what happened on 41. We traded below 40, and the bears got disappointed with their entry bar, and they may look to exit. High one buy for the bulls, decent signal bar, and decent context. 42 broke out to the upside. We're still within the range of bar 40. It's a 4-bar tight micro or tight trading range. But 42 is a bad sell signal bar, probably go at least a little bit higher. And then an outside bar, 43. By the way, I think bar 40 was an obvious stop placement for the bears, and obvious stops usually get run, especially after this is bad context to be selling. And then we went outside up, so bear breakout below 42, and then reversal up on 43. In general, outside bars are trading range bars, and they get retested. It's an expanding triangle on a lower time frame chart. So usually not ideal to buy high, buy above the outside bar, or sell low and sell below the outside bar, but 43 might be occurring in a bull trend. At this point, it's more of a broad bull channel, if it is a bull trend. So this is what the bulls are hoping for. Maybe something like this. The bulls see higher lows. They're hoping this breakout leads to higher highs. We have a higher high here, even here. So the bulls still have the broad bull channel argument. And for the bears, if this was their major trend reversal attempt, it's failing. But now this was enough of a major trend line break from this tight bull trend. The retest could find sellers above. But as a bear, do you really want to sell against 43? Tight enough channel. Even though it is 2 legs, we'll probably go at least a little bit higher. And then bear bar 44, but you have to judge the strength of the bar and ask yourself, is this reversing 43 and this rally and this entire rally, or is it a breakout pullback testing a breakout point, maybe the bar 40 high? It is true we had bulls disappointed over here below bar 25 and anywhere above that, and so we're retesting those levels and those bulls are exiting, but I don't know if this is enough for the bears to be shorting. It's too tight, and 43 was such a big bar, it'll probably get its own second leg. And then 45 could be that second leg, but 45 is a weak sell setup, so probably more buyers below. It is 3 pushes up on a minor time frame, 1, 2, 3, but it's a minor pattern. 45 closing above its midpoint makes it hard to sell this. And then 46, the market reacted, so minor wedge, testing down, but where's the market testing to? Probably the lowest part of the last leg of the wedge, which would be the 46 low, and that's where we're testing on the 45 low, which is what 46 is testing. It's still always in long. It might be a trading range, and it might be buy low, sell high, so it might be 1, 2, 3 legs up, high in a trading range. Bulls will exit below 46, and bears will sell, but this still might be tight enough that any reversal attempt will be minor and lead to another leg up. And then 47, a strong entry bar for the bears, but testing the bull trend line. The bears trying to break out below the bull trend line, but they still need follow through. 47 is the first bar closing below. We're also testing near the low of the outside bar, which is the bottom of a trading range, so it might be buyers in this area. And then 48, disappointing. 47, bear breakout, and then 48, they did not get follow through, so bears might bail out of the trade above 48. This might be strong enough down for a second leg, but it's an overall trading range. And 49, there were buyers above 48. 49 is a low one short on the bull trend line, probably buyers below. And then 50, a bull trend bar, testing these prices again. The bears didn't do enough here for a major reversal, and now we're testing here again with stronger momentum, probably going at least a little bit higher. And the bulls looking for measured move targets. Maybe a measured move of this bull flag up to here. And you can see where that price is with the prior day. Bulls trapped on the 78 close, just about the same price. 51 pulled back. It's a high one at the top of a trading range, but it's also possibly a broad bull trend or a broad bull channel, and we're near the trend line, so there's room to the upside. So still okay to be long, and a micro channel since 47. Probably buyers below the first pullback. 52, another doji. So the momentum is weakening for the bulls, but for the bears, do you really want to sell below a trading range bar after a pretty strong rally? It's a double top, and for the bears, they'll argue maybe it's a trading range, maybe it's a triangle. And the bulls have had 1, 2, 3, and then a double top. But again, this is strong enough. The first reversal probably be minor and lead to a second leg. And instead of pulling back, we got the bull breakout. This bull breakout on bar 53 tested the close of the prior day, and you can see that here. Might be a leg count reset, breaking out of this price structure. Maybe this is a leg 1 breakout, and it's resetting the market cycle. And then follow through for the bulls 54. Minimum follow through. It's an inside bar and basically a doji, but they did prevent a bear close, and this entire rally might be 1 breakout. So probably buyers below. 55 going higher, but now we have 1 pause, 2 pause, 3 possible parabolic wedge. Might entice bulls to take profits on 55, so we might pull back and convert into a trading range similar to over here. Might have been 1 pause, 2 pause, 3 pause. It's just buy climax after buy climax, and the market converts into a trading range. Over here, buy climax, pull back, again, over and over. Eventually the bulls become exhausted. And that's what happened on 56. Bulls took profits on the close of 55. And bears, if they're really aggressive, maybe they sell the close of 55. But in general, it's okay to take profits on the close, but I'm less sure about selling. 56 is testing the breakout point. And what's the breakout point? Maybe the high of bar 52. So the bull breakout, probably leg one, pull back, and we'll get a second leg. But 56 is a disappointing bar. And disappointing bars have reactions, and they usually lead to second legs. And I think 56 is strong enough to be disappointing enough for bulls who are long on 55 to say, darn, that's not good. I'll have to scale them lower. And if we get back here, I'll look to take profits. And that will lead to a second leg down. 57, buy climax. We got right back to the close of 55. But what I just say, if you're a bull and you bought the close of 55 and that's your entry bar, what are you doing here? This looks more like a gift than a strong bull breakout. 58 broke out to the upside, but trading range bar, small body and big tails. Now it's maybe 1, 2, 3 legs up. The market might be converting into a trading range, and we're testing the bar 78 close to the tick. 59 going a little higher. 3 bar micro channel, but might be 1, 2, 3 legs up, but it's still tight enough that any reversal will probably be minor. Bulls might look to take profits here, maybe above yesterday's high. But as far as selling, there's not enough selling pressure. And then for the parallel, maybe the bulls have this target, the broad bull channel. 60 going higher, it's becoming parabolic and climactic. 60 is breaking out of yesterday's high, but only by a little. And the bulls still need follow through here. And they get it on 61. Micro channel since 56, but it's about 6 bars. Like I said earlier, at some point, 6 or 7 bars, the probability shifts, more likely for a pullback or a reversal than continuation. And there's a risk that this is 3 legs up and a parabolic wedge, which will lead to a deeper pullback. Bear bar 62, always in bulls, they can get out below 62, even though this is strong enough for a second leg. We're getting far from the moving average. Had a lot of trading range price action here. And then we know on the daily chart, we're in a big trading range. Now we've had consecutive buy climaxes. Market could easily go more sideways here. And as far as 62, high 1, probably more sellers above. And 63 triggered the high 1 and reversed down. So micro level top, 61 and 63. Bulls, if they didn't exit below 62, they'll probably exit below 63 and look to buy lower. Some areas of support below are breakout points. Here's a breakout point where bulls might set limit orders to buy, and the close of 56 would also be a target. $64, a bull bar, so if a bear sold below 63, that's a disappointing entry bar. But for the bulls, looks like we're converting more into a sideways market. The bulls want to buy low and sell high, so we might have to go lower to find buyers. If we do go higher, there's probably sellers above. And then 65, almost outside down, probably an outside down bar. If the lows are identical, it would be considered an outside bar, even though it's not strict. So outside bar, 65 in general, trading range bar, sellers above, buyers below. But here, might have to go lower, test the moving average. So not ideal, plus it's a second reversal. We traded below 62, pulled back, and then second reversal on 65 with a strong signal bar. Bulls might step aside and wait for a correction before buying more. 66, we traded below 65 and found buyers. It's a tight trading range. 66 might be 3 pushes down, 1, 2, 3, and then a strong signal bar. But the context is bad. It's in a tight trading range. After consecutive buy climaxes, this was not enough of a correction for all of this. Probably sellers above. 67, good bull bar, but still within the tight trading range. Might be a buy vacuum of resistance and sellers above. And then 68, disappointing. If a bull bought the close, they got trapped on 68. and they might exit just below 68. Tight trading range, possible final flag with magnets below. 69 bear breakout, consecutive bear bars, still within the tight trading range, so not ideal to sell, but also hard to buy after consecutive bear bars with the moving average just below. And as far as stop orders, probably more sellers above 69 than buyers. 70 pulled back, but there were sellers above. Bears will probably get a second leg down. The market's in a tight trading range. Then we fell below and found buyers. Now at this point, we've had 2 or 3 legs sideways to down and a strong signal bar 70 or 71. Bulls might buy above 71 and bears might exit shorts above 71. We might get a retest of the highs. We tested the moving average and found buyers immediately. This was a moving average gap bar setup. We haven't had a bar touch the moving average since bar 50, so the first test probably found buyers. 72, pulling back, but it's an inside bar and just above the moving average, probably buyers below. And 73, the bears tried to break out and they failed. It's a micro channel since bar 67. No bar traded above the prior bar's high, so that reduces the probability for bulls buying above 73. But for the bears, it's a nested 2 legs down. 1 pullback 2 and 1 pullback 2. It's also a bear channel. Lots of failed bear breakouts. And an overall bull trend. So an increased risk of a breakout to the upside. 74, bull breakout, but it's a trading range bar in a tight trading range. At this point, traders are probably looking to buy low and sell high. So even if we go up here, there might be more sellers above this trading range. Consecutive bull bars, 67, might have been by the close. Bad context, but the point is there are bulls trapped on the close of 67, so that's another target. 75, an inside bar, but 3 consecutive bull bars in the middle of a tight trading range. Not ideal to initiate trades in either direction, but I certainly would not sell below 75. There's probably more buyers below. 76, an outside bar. A little bit of a surprise, but the bears still need follow through. We're still within the tight trading range. And the bulls simply say, okay, 1, pull back, 2, pull back, 3. 3 or 4 legs down, probably a bear channel, which is a bull flag, and a bull trend with buyers below. Even if we get to this red line, bears who sold above 56 are trapped, looking to get out, break even. And that's what happened on 77. 77, so we have an outside pattern, OO. That's breakout mode. And at this point, we had a big bear breakout, outside bar, 76, and then an even bigger one to the upside, 77, in a bull trend, probably going at least a little higher here. And 78, racing higher, and you can see this green line is the high of the prior week. That's a magnet, and we raced straight to it. We pulled back on 79, but we came so close. The odds are we'll test it, but 79 is a high one after maybe 1, 2, 3 big legs up and a buy climax in a trading range. There might be more sellers above 79. II pattern, possible final flag. It's breakout mode. Still, this magnet is so close that we might touch it. But even if we do, we'll probably find sellers there. And for the last part of the day, we finally tested the magnet but did not close above it. Let me erase some lines and go over always in today. So here's a low, high, and the weekly chart. It was probably always in short on the open, but always remember 50% chance any breakout on the open reverses, and the context was bad. So when we broke out below yesterday's low and had disappointing follow through, and then definitely when you see bar 6, you know you have to get out, and it's disappointing. When did it become always in long? Maybe after bar 9, 4 consecutive bull bars, closing above the prior bars. And then through here, we never became always in short. This is a bull flag. It's a minor reversal. So bulls could hold long, or they could exit below a bear bar, look to buy above a bull bar. And so here, 19, we know it's a minor reversal, but bulls will exit below. And if they didn't, they might exit below 26. Maybe they bought again above 22, exit below 26, look to buy above a bull bar, did not trigger. Plus too tight, probably get a second leg down. Maybe buy above 31, but still so tight, probably get a second leg down. And then 36, they buy above that bar. Always in long. Still a trading range. So at this point, might be buy low, sell high. Might be more sellers above. We did get the bull breakout in this case. Never became always in short. But then here, we became increasingly two-sided. Bulls probably exit below bar 65. And if they do, they can buy above a bull bar, closing on its high 66, but then exit again. So it becomes a tight trading range. Stop orders get chewed up, and it's a limit order market. And then here, maybe they buy above 73, wide stop below 57, because this is a skunk stop location. You can see what happened. Stop got run, and then we reversed up. And for stop orders today, aggressive to buy above bar 6, but if you know that 50% of breakouts on the open fail, and you know the context, and we reversed back above the low of yesterday, it's an okay buy above 6, and then maybe it's buy the close 9, buy above any bull bar in the strong rally. High 1 above 22, okay trade, but you know this will probably get a second leg down, and this is a minor second leg. This should get a second leg similar in size. The market likes symmetry. So what happened? We got leg 1, complex pullback, leg 2. And then for stop orders in here, I thought you could buy above 31 and buyers above 36. As far as selling below 26, I don't know. I think you can get out of longs below, but you're trading counter trend, and if anything, it's a scalp. Over here, second reversal at the top of a trading range. I thought you could sell below 46 for a scalp, but then 47 consecutive bear bars. That's good for the bears, but you always have to think about the trader's equation. Here's your risk, here's your reward. What are the odds we come all the way down here? There's probably buyers below 35, and this is a trading range. And so bears get out of shorts, they scalp out, and then we get a bull bar closing on its high, 48. Bulls can buy above that bar. 57. I might have made a mistake in here. 56 was the first bear trend bar in a strong rally. It might have been a parabolic wedge. 1, 2, 3. And maybe we start go sideways here. But it is the first bear trend bar in a strong rally, so bulls will buy the close of 56. And 57 was so strong, they bought above it as well. But then up here became increasingly two-sided in a very tight trading range, probably a limit order market, and not ideal for stop orders. I thought it was okay to buy above 73, wedge bull flag at the moving average, but it's a small signal bar and it's a tight trading range. There's buyers below 73, so that's not the stop location. Stop location is at the prior major high or low, 57 or 56. For limit order trades today, there might have been sellers above bar 5 expecting a second leg down for the bears, but when 6 was the entry bar, they probably bailed out of the trade. And then buyers below all of these bars, but they did not trigger until finally up here below bar 18. So if you think through the market cycle, bull spike, pullback, this is the start of the channel phase. So you have bulls selling at new highs, so bears might sell at the new high there. That's a possible limit order trade. And then over here, 1, pullback 2 legs down, inside bar, probably buyers below the inside bar, and buyers below all these bars, betting that this reversal is minor, and we're low in a bear channel, a bull flag, and that breakouts to the downside are low probability. Over here, you had bulls trapped below 25 or on the close of 25, so on the retest, probably okay to sell the close of 43 after you see 44. And then bears get in short here, they scalp out. And then we got another strong breakout to the upside. Micro channel, buyers below the first pullback, below 55, and there were. And then here, still probably buyers below 61, but possible 3 legs up, maybe 1 pullback 2, high in the trading range with the prior day. And so they scalped out. 62 became a bad high 1, sellers above, and then tight trading range in here, limit order market, sellers above all the bars, and buyers below. Please feel free to leave questions in the comments and include timestamps for any questions specific to this video. And I hope everyone has a good rest of their night. Thanks for watching.